and welcome. At a time of economic uncertainty and rapid AI driven disruption, what should people, businesses, and the world really brace for? To decode this specifically, I'm joined by Peter Cardillo, Chief Market Economist at Spartan Capital Securities. Peter, thank you so much for joining the Times Now digital network exclusively for this interaction. And to begin with, I'd like to ask you just how vulnerable is the global economy today to geopolitical tensions and volatility in the commodity market, in particular, the oil price shocks that we're witnessing?
Well, there's no doubt that the global economy is feeling the pinch of the oil shock, and of course, the consequences of the war. And we do see a slowdown. For now, we don't see negative growth developing within the next, let's say, 6 to 8 months. However, if oil prices should continue to rise and stay at elevated prices for a sustained period of time, that would change the scenario, and we could be headed for negative global economic activity.
Do you expect a growing risk of stagflation then globally for
Well,
India as well as the rest of the world?
I think for the global economy, I think the rest of the world is going to experience not necessarily stagflation, but higher inflation. At least here in the States, we've seen inflation move up. For a while, I guess you could have labeled it as stagflation, but that's not the case. The case now is that inflation has gone up. We're at 3.8%. And it's also spreading to other sectors and not confined to energy. And so that means inflation moving higher and then probably turning into stagflation. But for the moment, it's inflation that's picking up steam.
All right, Peter, would you read what is presently unfolding then as a possibility of a global slowdown in 2026?
Oh, I think so. I think we're headed for a global slowdown. That doesn't mean that we're headed for, some sort of negativity, or I'll use the word recession. But an economy that is not likely to exceed maybe 2 to 2.25 GDP growth. And on a global scale, probably we're looking at maybe 1.25%, which is, growing, but growing at a snail pace.
Right. What are the biggest concerns that investors then should raise for?
Well, I think the biggest concern, is energy. And if energy prices continue to move on higher, it's going to be a problem. It's going to be a problem for GDP growth, and it's going to be a problem for the markets as well.
Right. Is there any near-term or long-term forecast that you have as far as energy prices are concerned? And, what sectors would you be most worried about then, Peter?
Well, look, there's no doubt that there's plenty of oil in the world. We have tons of oil. Unfortunately, we're in a situation that is causing some temporary disruptions, and that means shrinking supplies because 20% of the world's oil that is headed for mostly Asia is being blocked. And so we have a speculative movement in oil. And that's what's causing the shortages, that speculative run on oil prices. So I think, It all depends on the war factor. How long will this war continue? Uh, the latest news regarding that is that Iran is now reviewing, supposedly, the latest proposals. If there should if there should be a mutual agreement and the war comes to an end, I think we see oil prices move lower. That doesn't mean that they'll move sharply lower in the beginning, but at least they will not go much higher. And worst case scenario, you would have then stagflation, right, until deflation sets in. But deflation would take at least another 5 or 6 months before we could talk about that.
Right, Peter. Now, India is witnessing fuel prices rise, an all-time low for the rupee. Inflationary pressures are present. And what, to your mind, then, can policymakers in India do to ease the situation at the moment?
Well, it depends. I mean, there are some countries that are making deals with non-OPEC members, such as Russia and the United States, obviously. And the problem is that it takes time. But if you make deals, then you can have that flow of oil, even in the absence of what's coming out of the Straits of Hormuz.
All right, Peter, could, of course, the tech layoffs also that the world is witnessing eventually spill over to the broader global economy? What would be your message to tech employers and employees at the moment? Many employees who are now seeing that tech dream really fade in front of their eyes.
Well, I kind of think that that's going to, begin to level off. I don't believe that artificial intelligence will replace the humans to, let's say, 70 or 80% of what the market might be faring. I don't think that's going to happen. Yes, some jobs will be lost, but I don't think it's going to be a total AI environment.
You don't think it's going to be a total AI environment, but for those wondering whether we are headed for times that are going to witness this economic uncertainty coupled with the AI disruption, what would you say?
I would say be prepared to perhaps, if necessary, find another field or work on avenues that you can possibly be useful even under AI.
Right, and your message to governments and policymakers, where, of course, the marginalized really, whether it's India or globally, the marginalized are suffering the most with inflationary pressures on one hand, as well as the AI disruption coming in on the other, Peter.
Yeah, it's a short term. Look, I'm not going to say it's not a short term problem, but potentially, I think it'll work out.
You see this situation working out?
Potentially, yeah, I think so in the future.
As concerns around the state of the global economy mount amid the West Asia conflict, the focus truly is on how governments, businesses, and workers altogether navigate this global landscape that is evolving and, as we see, changing. Thank you so much, Peter, for your time and for this interaction. This is Sakshi Bajaj for Times Now Digital.
Thank you.